Hi, my name is Cyndy McDonald, and today I'm going to share with you some very important information about how you can pay for college, and more importantly, and more specifically, about the whole college financial aid process and how it works. Sometimes what we think the way that it should work is not necessarily how the process is set up. So make sure you have your phone or a pen and paper nearby so that you can take some notes and also play the game that we're going to play. So we're going to start with who wants to be a millionaire? My name is Cyndy McDonald. I'm an educator and entrepreneur. I've been doing financial aid for over 30 years. I teach in the UCLA College Counseling Certificate Program. I've also worked as a high school and middle school counselor, and I've presented this presentation all over the country because this is such an important topic, and it's one that so many people don't know and understand what goes behind how to pay for college and how things are set up. So the rules we're going to play a game right now. I'm going to ask you some questions. There are going to be lots of multiple choice. So the rules for playing this game are just be ready, have your phone ready, and be ready to mark down some answers to the upcoming questions. And let's see how many you can get right. So the first question is what is the average lifetime earnings of a four-year college graduate, somebody who has a BA or BS degree? And we have six answers from A to F. Is it 973,000, 1.3 million, 1.7 million, 2.2 million, 3.2 million, $3.6 million? Which one do you think is the answer of the average earnings of a four-year college degree? Let's see what you came up with. Are you ready? So we're going to look at it. It's D, 2.268 million. A is actually the amount you would earn if you have some high school. If you never graduate from high school, you're always going to have below $1 million lifetime earning. This is like $20,000 a year, which would be very difficult to raise a family or accomplish some of those life goals. $1.3 million, B, is the amount you receive as a high school graduate. So you're being able to, your capacity, earning capacity goes up once you go and graduate from high school. C is community college. It goes up to 1.7. When you graduate with a four-year degree, though, it goes up to 2.2 million. The next number is for a master's degree, $3.2 million. And the last number on the chart is for a professional degree as a computer science, physicist, doctor, dentist, lawyer, things like that. So those are the average lifetime earnings at different educational levels. Question number 2. The federal government will give you money for continuing your education. Now, that money, there's certain things you can use it for and certain things you cannot use it for. So on this list, what are the things you cannot use it for? And there's a list from A to K: tuition, car payment, books, fees, meals, housing, plane ticket home for the holidays. What about pizza on a Friday night, or toothpaste, a notebook? What about those kinds of things? Car insurance or a laptop computer. So think about how this money for education, the financial aid you get, what can you use it for and what can you not use it for? So mark the ones you cannot use it for. You ready? There are really only two things on this list. You're not supposed to go buy a car and use it for a car payment, because it's not meant for that kind of a capital expense. And the same thing, you're not supposed to use it for car insurance, but you can definitely use it for tuition, books, fees, meals, and housing. Those are all official costs of going to college. Plane ticket home for the holidays. That's part of your transportation, and we'll talk about that. Pizza is also a personal expense. They know you have to live, and there are certain things you're going to need. So those are all things that financial aid can help you cover. Likewise, the laptop computer. Question number 3. How much does it cost to go to colleges? So how much does an average year of college at the University of California, San Diego cost? Or think about a college in your area. This is a public university in state. So what's the average cost of a college in your area, in your state, cost to go to for a year? Is it A, $85,000, B, $32,000, C, $25,000, or D, $9,000? So pick your amount that you think it costs to go to college in your area. And this one is for the University of California, San Diego. The answer is $32,000. Studies actually show that students often, and parents as well, often overestimate the cost of college. And so they think about all these, they see all these numbers, they see what the costs are, then they add more numbers on top because they know that you need money to get to college, you need money to live on, so oftentimes parents and students will overestimate the cost of the college, but $32,000 is the average cost of an in-state University of California campus. So the top number, the A number, is the average cost of a private school. And it doesn't matter what state it's in. There are some that are more, some that are less, but there are colleges that cost up to $85,000 a year. So C is the cost of other public universities and community colleges, things like that. And D is for community colleges, usually, especially if it's a local community college. Again, depending on the state you're in, here in California, it's around $9,000. So $25,000 is other public universities. For example, California State University is a little less expensive than a University of California campus. So that helps you to see, okay, what are the costs for going to college? So number 4, students need to report parent income and your own income when you're applying for financial aid. So a lot of times I get this question all the time is, well, can I become an independent student? What do I need to do to become independent so I don't have to count my parents' income? So what does that entail? So here are the list of items. And again, mark, there's multiple ones. What do you need to do to become an independent student? Do you have to A, get an apartment and live on your own? B, go into the Navy or Army, some kind of armed services. Just not have your parents claim you on their income tax. That's C. And as I'm reading these, think about which ones you think apply and just mark them down. Pay for your own car, pay for your own expenses. That kind of goes along with getting an apartment and living on your own. Get married, turn 24. That's, then that means you have a long time to wait if you're trying to become independent when you're 18. So that doesn't sound like much fun. Have a child that you support without the help of your parents. As a counselor and as a high school counselor, I had many students that were in this situation. Sometimes you might have other special circumstances or have a college degree. Once you get your college degree, what status does that put you in? So mark all the different ones and look at how many you have marked down for question 4 that you have to do to become an independent. Okay, do you have them? All right, let's look at what our answers are here. And getting an apartment, living on your own makes no difference whether you're independent or not. A lot of times parents think, okay, you're going to graduate from high school, you're going to go get an apartment, you're going to be on your own. And then, we don't need to help support you when you go to college. And the financial aid process doesn't care whether you're living on your own or not. Same thing, doesn't care whether you're paying for your own car. Doesn't care if your parents are claiming you on their income tax or not. It's really not a factor. So a lot of times, especially when families are, you have split families, maybe one year mom that does make you independent. Turn 24. Once you become 24, then you can become counted as independent. If you have a child that you support without the help of your parents, then you can be independent. But if you're living at home and your parents are helping you support your child, your son or daughter, then you're still a dependent. There are other circumstances that the colleges will use what's called professional judgment to say, okay, you can be counted as an independent. Once you get your college degree, you also are counted as an independent in that circumstance. So there's a lot of things that when you're just graduating from high school that you're not going to want to be in your life to make you an independent. It's pretty hard to become independent until you've started going through college and doing some of these other things. So that's something that is pretty much off the table for most students coming out of high school. Number 5, expected family contribution is a term that you're going to hear a lot. And actually, this term is going to be changing in the upcoming years. It's going to be changing to a student aid index. Either way, what it means is it has a certain meaning, a certain definition. So mark down which one you think is the right definition. Is it A, the money a family has left over after paying for family expenses to pay for college? B, the amount of money a family tells the college they want to contribute to pay for college. After all, it's your family contribution. So how much am I going to be able to pay out to the college? C, the contribution of parent income and student income. And D, families are expected, but not required to contribute money toward expenses. So which one of these 4 answers do you think is correct? A, B, C, or D? All right, let's see what answer you got. C, this is the definition. It has nothing to do with whether you're willing to pay or how much you think you're going to pay. It's a calculation, and it gives you the contribution. It's calculated from parent income and student income, and we're going to talk more about that. All right. So how'd you do on those questions? How many of them did you get right? And more importantly, what did you learn from that? I'm hoping that you realize that this is college financial aid and college affordability is something that's out there for you. And by going to college, you will earn more than $2 million in your lifetime. But you need money to go to college, and that comes through financial aid to colleges. And knowing how your financial aid works will help you become that millionaire. So we're going to talk about the financial aid process. It's 3 different elements that go into this financial aid process. Cost of attendance is the first one. Expected family contribution is the second one. And then financial need is the third. And oftentimes we think we know what's driving financial aid and how much we're going to pay for college, but oftentimes we're wrong. So let's start with cost of attendance. Cost of attendance is tuition, room and board, and those are known as direct costs. Those are things you're going to write a check to the college. The college is going to send you a bill and say, here's my, your tuition. Here's the cost for room and board. This room and board is your dorm room and your meal plans. That's room and board. There are other costs though, and this is related to that first question. You have books and fees. You have personal expenses that, pizza on a Friday night, that can count as a personal expense. Having to buy a computer, that can count as a personal expense. Transportation, the plane ticket home for the holidays. So those are also costs that go into that cost of attendance. And these are called indirect costs because you're not paying a check. You're not sending a check to the college for your personal expenses or for your transportation, but these are still expenses that you're incurring, during the year that you're in college. So all colleges count these 5 things as part of their cost of attendance. You'll see it listed as different terms, but it's all the budget for going to college. So that's element number 1. Element number 2 is the family contribution. So you have these costs, these 5 things that it costs to go to college. Then how do you figure out how much you're going to pay? That's where the EFC calculation and the FAFSA, which is the whole reason the federal government has set up the whole free application for federal student aid. That's what the FAFSA stands for, so that you can see what your family can pay toward college. So what is this? It's an estimate of your family's financial strength. It's looking at not just immediate numbers in terms of income, how much money your parents have going in and out, but it's also looking overall financial strength. So how can your family absorb the cost of paying for college based on all the financial resources that are available to your family? Certain families have more resources than others. So this looks at all of that. It is not a less estimate of leftover resources from your finances once other responsibilities are met. If we look at it from a consumer perspective, we're going to go, okay, I've got car payment, I've got my house, I've got rent, I've got, different things that I'm paying for. Okay, once I get all those taken care of, here's how much I have left over to pay for college for my son or daughter. That is not what the family contribution is set up. And yet that's how we look at it as a consumer. So it's important to understand what the true definition is versus the way we think of it from a consumer. And your family contribution is now based on past year's income. It's called prior. So it's basically 2 years past income. It depends on when you file your FAFSA, which year they're going to use. So you'll need to check and double check so you know which year is being used for your financial aid, but it's up to 2 years in the past. So what goes into the expected family contribution? It's parent income and parent assets. Your income, student income, and student assets. And those 4 things are combined to create or calculate your expected family contribution. Now, there are a lot of factors that influence family contribution, and I see this all the time. You'll have 2 families that live side by side or, on the same street, and somebody will say, oh, my Johnny qualified for all this financial aid and all these scholarships. And so everybody expects that their Susie or their David will apply, qualify for those too. But what they don't know is all these factors that impact or influence that. So for parents, it's income, how much money they have in savings, sometimes other assets like stocks, bonds, things like that. The age of the parents, if you're 45 and sending your first child through college, that's different than if you're 65 and sending your youngest child through college. The number of kids you have in college and your overall family size. So this is why you really can't compare families side by side, because so many of these factors can be very different. From a student perspective, there's another aspect. But from the factors that influence the family contribution, there's what I call the middle child bonus. Because if you're in the middle, you're oftentimes going to have people coming before and after you, and that means you can maximize your financial aid. And we're going to see there are some federal proposals to change that. I'm going to talk about that in just a second. So we'll see if the middle child bonus continues or if it's eliminated. We're all rooting and trying to advocate to keep it, but we'll wait and see. From a student perspective, they're going to look at your income. Now you have a certain amount, and each year it goes up. It's right around $6,000 to $7,000 you can earn without it affecting your financial aid. But if you earn more than that, you should plan to save 50% of every dollar you earn over that set amount. And so how many students are willing or able to save 50% of everything they earn? Very few that I have run into. So you want to know this number, and oftentimes it doesn't help you to earn a lot of money while you're in high school, because then it just counts against your family contribution. Savings, no matter what money you have in savings, it's going to be counted, go back to the college, it's going to count 20% towards your family contribution. So if you, sometimes grandparents will say, oh, I want to give you, money, or, maybe somebody else wants to save money in your name. Anything that's put in your name is going to go back as part of your family contribution the following year. So income and savings, both for parent and student, count. So this is where independent versus dependent and all those things we talked about in the questions, you can't just say, oh, I'm going to become independent and I'm not going to count my parents' income, because you have to be 24, you have to be in the military, you have to be married, you have to have a child, you have to have a degree, all of these things you have to meet in order to be independent. So most of the time as an incoming freshman, if you're under the age of 24, you're not married, you don't have dependents, and you're not in the military, you're going to be a dependent. So just count on that and plan for that. Now, there are two ways that this family contribution is calculated, and it depends on the kinds of colleges that you're applying to. The first method is called the federal method, and the second way of calculating your family contribution is the institutional method. So on the federal method, your home doesn't count, your parents' home doesn't count as an asset. A lot of times small farms, particularly the family has to live on the small farm, that won't count. Or the small businesses, if your family owns a small business and it has less than 100 full-time equivalent employees, then it's not going to count on the federal. And this is the FAFSA. So when you fill out that FAFSA, the free application for federal student aid, they're not going to ask you about these things. But if you're filling out another form, you're applying to a private school or another college that asks for the College Board profile, when they calculate your family contribution, they are going to look at homes as an asset. They always look at business, farm, and other assets. And it depends, different colleges count different things. But sometimes they might count retirement. They might even ask you what kind of cars you drive. So be aware that there are two different calculations, a federal method and an institutional method. And you can tell which one the college is going to use by knowing which form they're going to ask you, the FAFSA or the College Board profile. So the family contribution, that number that gets calculated is, right now, it's a family number, not an individual number. And so it does get divided between the number of students in college. As a parent, I had 3 daughters. They were all in college at the same time. And so what we were asked to contribute, say we had a contribution of $28,000. Well, then when I had 3 girls in college, that was divided out between each of them. So that made it a lot more affordable for us, because we're still paying that $28,000, but divided between 3. And so the family contribution right now is a constant number. And we think of it as a consumer of, like, if I have 1 child going to college, then I have my 2nd child go to college, then it's going to double my costs. And so right now that is not the case. Unfortunately, though, there is pending federal legislation that might change this definition of the family contribution from a family number to an individual number, where it would double or triple depending on how many family members how many siblings you have in college. So we'll see how that's not supposed to be implemented for a couple of years. So we're going to see how that goes. But right now, that family number contribution is a family number. So number 3. So we've talked about cost of attendance is 5 different items. We've talked about the family contribution, which is calculated looking at parent income, parent assets, student income, student assets, and other factors that are part of your family's scenario. And so those two things get taken together to create the third item in financial aid, which is financial need. And I love that this is a very simple formula. It's cost of education minus your family contribution equals financial need. It doesn't matter whether you're going to the least expensive community college down the street or the most expensive school in the nation. So they all will calculate financial need in the same way. So that's why knowing the cost of attendance or cost of education is so key, because once you know what that number is at the colleges you're looking at, and your family contribution, you can estimate your financial need. And that's a key thing to be able to do. So we're going to look at that from a college perspective. And this is something that I find, again, we often think about this from a consumer perspective. If I'm going to, want to go buy a car and I can only afford a used car, say maybe I want to buy a Toyota, well, then I don't have enough money. And if I go buy a Lexus or, a Tesla, then that's going to cost me 2 or 3 times as much. So I need to save my money and go less expensive. Well, a lot of times we think that's the way the college funding works too. I can only afford the community college, so I'm not going to look at that more expensive private school or that college out of state. And in the way financial aid and college funding works is sometimes that's the wrong approach, and I'll show you why. So again, I'm using California colleges, and I'm located here in California, but you can plug in this example, any college from your area that would fit into this scenario. So we're going to look at California Polytechnic Institute University. It's in San Luis Obispo here in California. It's a California State University. And then UC San Diego, which is a University of California campus. And then University of the Pacific, UOP, which is a private college up in Stockton, up in the Bay Area in Northern California. They've got great internships. They've got a cooperative education program, very well known for their business and health professions, pharmacy, dentistry, pre-med, things like that. So the cost for these schools is, Cal Poly is around $30,000, UCSD is around $36,000, UOP is around $70,000. Now, let's look at your family contribution. Again, we look at it and think my family contribution is going to have to go up if I go to a more expensive school. But the way an EFC is calculated, it's a constant number. It's not dependent on the cost of the college. It's dependent on your family's income and assets and your family's financial resources. So the EFC at all of these colleges is the same. So I'm expected to spend the same amount. Now, University of the Pacific only uses the FAFSA. If I were using another college, say an Ivy League college or some other colleges, University of Southern California, that use the College Board profile, then that EFC might be calculated differently. So keep that in mind. But for purpose of my demonstrating and illustrating how this process works, we're just using colleges, both public and private, that only use the FAFSA. So the EFC stays constant. So remember the formula, it's cost of education minus your EFC shows what your need is. So my need at Cal Poly is going to be $15,000. My need at UCSD is going to be $21,000. But my need at UOP is going to be $55,000. So that's a whole lot more need. If I have a need of 15 versus 55, what's that going to look at? Now, some of the colleges will, even though you have a certain amount of need, doesn't necessarily mean they're going to give you all the money you need. And that's where knowing the colleges and their financial aid history or statistics is important, because Cal Poly may say, yeah, we know you need $15,000, but we only have $8,000 to give you. Same thing for UCSD. Yeah, we know you have need of $21,000, but we only have $18,000 to give you. But UOP might say, yeah, you're just the right person. You're exactly the right student that we want for our program. We're going to give you $55,000. So this is how you can end up paying less for a more expensive college. And at UOP, I mean, Cal Poly, you would pay $22,000 because you take your estimated family contribution and you add in that what's called a gap, the difference between your need and how much the college is offering you. You have to come up with that money somehow. So out of pocket, your family would pay $22,000 at Cal Poly, $18,000 at UCSD, and $15,000 at UOP. Just because a college is more expensive does not mean that your family or you will pay more out of pocket. This is called the net price. And there are actually calculators on college websites to show you what net prices are. So don't assume just from the sticker price of the colleges what your expense is going to be. Cost of education determines that financial aid, not your estimated family contribution. And sometimes we think, oh, based on my EFC, that's what it's going to be on. But it's always based on cost of education. So that's why you want to know what that number is so that you can calculate. So I mentioned EFC calculators. So there's a sticker price versus a net price. The sticker price, as we saw, is that full cost of the college or university. A lot of times parents, especially, they might be looking through the college website or articles or things, and they'll see the total price of a college and they just close the website and say, okay, that's off the table. I know that's what my dad did. And not knowing that it's sort of like buying a car. Very few people pay the full sticker price unless it's in one of the colleges that don't offer merit scholarships. And that's a different story. That's a different process. But most colleges, most of the time, you're not going to pay the full sticker price of a college. What you're looking for is the net price. And that's the amount a family pays to attend a college after counting scholarships and grants. So you can find out through these net price calculators what that net price is going to be. So you want to focus on the potential net price of the college, not on the sticker price. Then there are several EFC calculators out there. So to find out what your numbers are, you can go to the College Board, which is the Big Future EFC calculator. There's one, the FinAid EFC calculator, which I've used for years and years. And I was so thrilled to see that it's up to date. It's using current data. That's the thing. You don't want to use a calculator from 2020 or 2018. You want to use one from the most recent year. And then a lot of colleges have their own EFC calculators because they are required to have one, and they give you that net price. We'll have you put in information. A lot of times they'll say, okay, here's what you need to be. So oftentimes they're called net price calculators. So they all have to have one. So once you filed the FAFSA, once you've gone through this process and the college has said, yes, you have need, that financial aid is going to come in packages. It's either going to come in gift aid, which is grants or scholarships, which is free money you don't have to pay back. And so that's the first kind of money. And that's the money that gets counted in the net price, after counting scholarships and grants, whether they're need-based, they come from the college or because of your need, or merit-based because the college is, awarding you for your scholarship or sports or whatever other types of things they're looking for. So, but the free money is grants or scholarships, money you don't have to pay back or you don't have to earn. So where does that free money come from? Oftentimes it can be private scholarships that you look for. There's lots of free websites to go. Anywhere from $50 to a full scholarship. So make sure you check with your high school, your counselors, and on websites and look for those private scholarships. A lot of the colleges will give links to private scholarship searches and things like that. Money comes from the federal government through Pell Grants, through state government. A lot of states, Florida, Texas, Georgia, California, many other states have state grants that can give you money. So check in with your state, check at your high school and see what they have available. And then also institutions, the colleges themselves, and they'll have grants, Regent scholarships, alumni scholarships, a lot of different kinds of scholarships. So the first category I said was, gift aid, which is free money. The second category is what's called self-help aid, and that's student loans, also working. It's called work study. When you work on campus and it's part of your financial aid, it actually doesn't count as income on your financial aid, which is a good thing. Because remember, you have a cap on how much you can earn. And if everything you're earning and when you're in college, then is going to count against you, then that can be discouraging. So the way financial aid works, and you're offered work study as part of your financial aid award, it's not going to count as income. So this is money using student initiative where you're working, or initiative where you're going to borrow money and pay it back. So there's student loans, there's what's called subsidized loan and unsubsidized loan. You only get a subsidized loan if you have need, and the government pays the interest for you while you're in school. And then you'll repay it, this subsidized loan, after you finish all your education, whether you're doing bachelor's, master's, PhD, or professional ones. You don't have to pay it back until you graduate. And by then you've got a job, you've got a higher earning potential, and you can make payments while you're in school, but you're not required to. And then there's also unsubsidized, and everybody can qualify for an unsubsidized student loan, whether you have need or not. This one, the interest does accumulate while you're in school, so you're still not paying back on it, but you are accumulating interest. Whereas the other one, the government's going to pay the interest while you're in school. So it just depends on what category you fall into. So when you look at this, some people will get a subsidized, and the subsidized loans, there's certain limits. And then the colleges will add an unsubsidized on top of that to give you an annual loan total. So when you get your financial aid awards, you want to look at what those numbers are and how they're divided. Now, how do you get that gift aid or self-help aid? You have to apply for it, and you file the FAFSA. Any college you're applying to, community college, four-year colleges, anything, you're filing a free application for federal student aid. And as mentioned earlier, you're going to use taxes from past years. It's usually called prior. So basically 2 years, it's the last tax year you've finished is usually how it works out. And you can usually start filing in October 1st. But when you start filing, they'll give you all the dates and things that you need so that you know that you're filing the right one. And there are other forms that you can use. I mentioned the CSS profile, and then sometimes colleges have their own forms. But if you're doing the FAFSA, they're going to use the federal methodology to calculate your EFC. If they're asking for other forms, whether it's the profile or their own forms, then they're going to use that institutional method for calculating your EFC, as I mentioned. And make sure you check due dates, because they will cut things off. And if you don't make things by the due date, then there's no leniency for that. Once you file your FAFSA, then what? You're going to get what's called and immediately once you file the FAFSA, you get the student aid report. So that becomes a document that the colleges will download, and that will be a document that you can use to look at where you're at and use in your financial aid process. It'll give you your estimated family contribution. So check that number. It's an important number to know, because once you know your estimated family contribution, you can check it against the cost of college and see what your need's going to be at your different colleges. Now, there's only room for 10 colleges on the FAFSA. And if you have more than 10, you have to put colleges on the list and then take them off and then put the new colleges on. So if you can keep your list of colleges down to 10, that's going to make it much easier for you. If you have any questions about the student aid report, talk to your counselor, call somebody in the financial aid office at the college. They're more than happy to help you and answer questions. And as I mentioned, you have to add or subtract schools if you have more than 10. Put your most expensive schools first, is your first 10. And then, if you have more than that, you can take the more expensive schools off and then put the less expensive on. So then once you start getting financial aid awards, remember those 5 things I talked about. These are all elements of the cost of attendance or cost of education. Now, how are you going to cover these? What I've found over the years is how families often work by dividing this out, it makes it a lot more affordable and approachable. So for example, you as a student, you can be counting on being responsible for paying for your books and covering your personal expenses so that mom and dad aren't sending you spending money. This is where your work study comes in. The work study, you don't have to turn that money in and pay for tuition. It's usually money that you earn working in the library or the student union or someplace like that. And then you get a paycheck and you can use that for your personal expenses. So that becomes your responsibility. I recommend students save their graduation money. And if you work in the summer, you save that money to have for paying for your book the next year. Now, parents will want to see you. They want to, they miss you. They want to see you. So a lot of times parents will help you with transportation. So you can say, okay, that's going to be my parents' expense. If you're not going very far away from home for college, maybe it's just a bus ride home or, hitch a ride with somebody else at the college. But your parents, oftentimes I've found that they will help you with that transportation because they want to see you. And then the last one is you can use grants and scholarships, a lot of Pell Grants, that federal money, that state money, the institution money to cover to cover tuition. And so sometimes it'll cover some of room and board, but this is where your student loans often go, is to help pay for room and board. Usually not enough to cover all of room and board, but it can have a significant impact. So be smart about your money, divide it out, and you'll see how much more approachable and affordable a college education can be. Because why? Why should you do this? I want you to think about your life as a tape measure. It started when you were born and you were little and you were in preschool and then elementary school, and now you're just getting ready to finish high school. But as you go into college over the next 4 years, what period of time is that over your lifetime? You're going to be working for 40 or more years. So the things that you do over the next 4 to 6 years is going to impact you that rest of that 40 years or more. The choice you make now will impact you the rest of your life. And so take that first step and apply for financial aid. Don't count things out. Check on the opportunities, check with resources in your community, and be able to take that first step. Thanks for attending. Again, my name is Cyndy McDonald. And if you have any questions, I welcome and encourage you to send me an email and I'll be glad to assist you. And I hope you found this presentation helpful and beneficial. I hope it's been inspiring and help you to see how you can afford a college education and taking those next steps in your life. So thank you for letting me be with you today.